October live cattle closed moderately lower and failed once again for the second day in a row to cross over or sustain any sort of strength above the 20-day moving average, which also really lines up with the downward trending channel or the upper end of that downward trending channel that cattle have been in here for the better part of the last 2 months. So a bit of a technical failure. Now, the failure doesn't mean that we can't get back over it. We may just be pausing before we go and try it again. But in order to do that, it would probably need to regain some strength here in the next couple of trade sessions to successfully challenge that 20-day moving average again. So for your technical traders, keep an eye on that. In the meantime, box beef prices continue to slump a little bit. They've been kind of trending lower, and that trend continued, which is a bit concerning as we get into the Labor Day holiday weekend. Oftentimes, we talk about that as being the second biggest grilling demand weekend of the summer, and one of the bigger demand weekends of the year. So for box beef prices to be softer going into that, it's not a great sign. Now that could certainly turn around over during the course of the weekend. We will have to see what it looks like when we come back from that 3-day holiday. But again, it's just a little bit of a concern that the market had the last couple of days, and possibly part of the reason why markets were a little bit lower. Speaking of demand, we also had our weekly export sales. They were up slightly from the previous week at 17,200 metric tons. That's up about 8% week over week, but also down 4% versus the 4-week average. Basically, what that's saying is that we've been very, very consistent and consistently okay when it comes to our weekly export sales on beef. Lots to be paying attention to here for the live cattle markets. So everybody stay tuned, have a wonderful day, and you stay safe.